everybody? So let's take a look at the stock market today. Gonna be a little bit more of like a just sit and talk with everyone, kind of go over some charts and kind of take a look at, exactly what's going on. I know the past few days, if not maybe realistically the past couple of weeks, have kind of seemed a little weird. We have a lot of catalysts. There's a lot of things going on in the stock market. The highest rate of inflation. We got the FOMC meeting notes yesterday. We have the quote unquote Santa Claus rally. We have end of year quad witching options expiration this Friday on the 17th. So we really need to take all of those factors into consideration when we're looking at the stock market. And the major problem that I'm looking at and that I'm seeing around social media is a lot of people are, very confused as to, for example, yesterday, how did we rally off of the Fed notes meeting or off the Fed note meeting? And then how is today, the NASDAQ 100 down 10 points, almost at 1.3% on the day, 2.5% now, as we give a little bit of a relief bounce going into the close. But with that being said, we are stuck in a range. Okay. So just to make things very, very simple. Okay. This market is going to be extremely hard for anyone who is looking to day trade, anyone who is looking to scalp, anyone who's looking for a trend. So what I mean by that, a day like today, perfect example of, you could have made a ton of money in the stock market shorting stocks or buying puts on specific stocks. Like Nvidia was down, 20, 22 points on the day. Qualcomm was down 10, 11 points on the day. AMD is down 8 points. Facebook down 5. The index is obviously down 10 on the Qs, and the SPY is down 4.5 points. IWM is down 4.5 points, Zoom down 3 points, Amazon down 84. So could you make money going short to the downside? Of course. The only problem is that a lot of people come into the market today thinking that stocks are going higher because of the close that we had. And then when things start to shift, you think that there's going to be a bounce coming. So you're waiting for the bounce, and then you just keep on waiting for the bounce, and that bounce never comes. Like today, for example, the bounce never came on the triple Qs, literally just 4 or 5 hours, 6 hours, just straight red candles. So you kind of miss your areas of opportunity. So if you really don't come into the market with a clear head, basically having a short memory, and what I mean by that is forget about yesterday. What we did yesterday, it doesn't mean anything. Okay. It doesn't mean nothing. When you're range bound, and that's exactly what we are. And the range that we're stuck on is the 50-day moving average on the daily time frame in this $401 area. Okay, so that's a 20-point range. Now, is there money to be made when you're range bound? Of course. What you're doing is you're shorting the top of the range, and then you're buying the bottom of the range until one of those two breaks is when we can start to see a definitive trend. So for example, if you came in yesterday or came in this morning thinking that we're long biased, well, we're at the top of the range. So technically speaking, anything at the top of the range is going to get stuffed into supply, and we're going to roll over. Now we are coming down to the bottom of the range. So typically this is telling us that we're going to find some support and possibly stocks into Friday, which they could or could not. Stocks could bounce. Now, even if the stock market bounces tomorrow, and let's say we're down 2.5% on the day, and let's say we close green 1.5%, where does that put us going into next week on Monday? It puts us in the same exact spot. So what that means is it's very, very difficult for a lot of traders who are looking to, hey, the stock is green today. Let me put on this trade. The setup is there. And then you put on the setup, and then you come back 1-2 hours later and it's completely failed on you. This is not a continuation market. The market is not in a trend. So meaning that anytime you're going to put on a long, if you're not actively scalping and taking out cash flow when you get that quick move to the upside or to the downside in your favor, the ranges can contract and reverse the opposite way. And just when you think about, selling your longs to go short, it starts bouncing on you the other way the following day, so forth and so forth. So what that leads me to is we are really not out of the woods on either side of the we're not out of the woods any way you want to look at it. So the chart that I have on my screen is the weekly time frame. If we kind of just look at this weekly time frame, obviously the week is going to be coming to a close tomorrow. Not the best close, but from a weekly time frame, we are still on an uptrend. Okay, so stock market is still telling us that we're bullish. Okay, until we break below this trend line, meaning closing below it, that's when things are going to start to shake up. Now, a lot of people are going to look at the stock market and say, well, NVIDIA is down 20 points. How much farther can it go? They can go a lot farther down. Think about how much NVIDIA has ran this entire year. So it has a lot more room to go. Something like Microsoft is down 10 points on the day as of now. And you may be sitting to yourself thinking, well, we're coming off of highs. A dip is to be expected, but it's going to find some support. Nobody says that it has to find some support. I'm just going to put it to you very clean and simple. If the triple Qs start to lose the 20-day moving average on the weekly time frame, stocks are going to go lower. Until we reclaim this 401 area on a close and we break out of this range, stocks are really not going to go higher. Now, can they test recent all-time highs? Of course. Can they test recent all-time lows, going back this last month? Of course. But that's the thing about being stuck in a range. You're not going to really get that follow through and that continuation, going into tomorrow and the next day and the next day. You can't just put on a swing trade today because you think it's at support and think that you're going to sell your options contracts or your equities, 2 or 3 days later for a profit. It's not working like that. We're going one green day, one red day, maybe 2 green days, followed by we're giving everything back. So until we start to lose, until we lose $379.51 on the triple Qs, or until we reclaim $401.23, this is the trading range that we are at. How you play this and navigate this market is you're buying down here at the bottom and you're using 378.82 as your stop, and you're riding this back up either midway or to the top of the range, and you're selling for profits here. Anytime we're coming into this $401 area, we're looking to take a look at stocks, see where they're at, where they're correlating at with supply. And then we're looking to take shorts on those back down to lower levels of support. That's just the way that it is. If you can't handle that type of market, then you're not going to be able to survive and you're going to continue to chop yourself up. A lot of people are looking for answers. Well, everything that came out with what Jay Powell said yesterday, we knew that he was going to be starting to taper. We knew that interest rates are going to be rising in 2022. We know this about the new coronavirus variant. We know that more people are going to, get infected. We know all of this. So why isn't the market pricing this in? The market doesn't have to do anything. Until we get out of this range, we are not in a trend. We are going up to the top of the range and we're coming down to the top of the range. So you have to take what's going on with a grain of salt. If you look at the daily time frame, I know this video is getting a little bit long, but just bear with me. If you look at the daily time frame, this does not look good at all. But if you take a look at this range, these trend lines that I drew out here, showing us our range, you can see we've tagged the bottom of the range 1 time, 2 times. This one, not so much at the bottom, this 383 level, but 3 times, 4 times, and then today, again, tested that 50-day moving average. And going into the close, the bulls are immediately buying it back up. So tomorrow, could we get a little bit of a bounce day? Maybe perhaps into 392 to 394 range? Of course. Could we break out a little bit and come back up to this 398? Of course. Could the market sell off into this 378 range? Of course. So that's why we can't come in with a bias and we can't really judge, are stocks ready to, break down? Are they ready to make all-time highs? We've been in this trading range going all the way back to the end of October. So the end of October is really when we broke into this range. We've only broke free through this range 2 times, okay, in the last month and a half, almost 2 months. So in the past 2 months, we've been stuck in this trading range. Is there areas of opportunities long and short to make money? Of course. But if you want to just continuously to put on trades and think that they're just going to run and you're going to wake up tomorrow and make money, it's not that kind of market. A green day close doesn't necessarily mean that we're going green the following day. A red day close doesn't mean that we're coming down lower. We could completely bounce off this level. Bulls are doing a fantastic job right now holding the 50-day moving average. So in the grand scheme of things, is the Santa Claus rally off? No. Until we break down below $378, we are going to continue to trade in this range. Stocks are going to continue to do exactly what they're doing now. Okay. So that's what's hard for a lot of people to wrap their minds around. You can't really understand it because you're looking at your particular stock that you're ready to trade and it looks like it wants to go higher. However, it's getting stuffed at the top of the range and coming back down all the way to support. We are not going to have clear direction until we lose 378 or we break over 401. If you cannot trade this environment, I would just suggest staying out of the market until we pick a side. If we pick a side and we start losing this 378, which is losing the 50-day moving average, losing the 20 MA on the weekly time frame, that's when things are going to start to get really aggressive to the downside. I think that's when we go into a 15-20% correction on the overall market. And I think that you're going to have opportunity to put on those trades to the downside. As soon as we start to get a close over 401.23 and we clearly break out, retest, and hold that level, I think that's when it's pretty safe to say that the market is going to start to push all-time highs again. Until we do that, this is going to continue to happen. And being that it's been 2 months, just about coming up on, a little over a month and a half, that's not to say that the market can't continue to do this for another month. If the market continues to do this for another month, that's when you really have to start tailor-made. Like you have to really dial in on your strategy, meaning that you have to size down on your day trades. You have to look for the quick move in either direction, and you have to not take previous day bias into consideration. So meaning that if we closed green yesterday does not mean that we're going to have follow through. Okay. If we closed red yesterday, that does not mean that we're going to have follow through. What we have to do is just clearly mark out the levels of previous day high, previous day's low. And if we can get over previous day high, do we backtest that and bounce off and go higher? That's when you take your long position and you're looking to take cash flow as soon as you get it. Do we break down below previous day low? And do we bounce, test that level, and then fade again? That's when you can take your short, and that's when you can start to collect on your cash flow and get out of the market and treat the following day the same way until we get out of $378 or $401. There is no if, ands, or buts or whatever. It just is the way that it is. I can't sit here and say that the market is going lower, okay, when we haven't even lost the weekly 20 moving average. As it sits right now, we've currently lost a 5 in the 10-day. However, we haven't even lost this channel on the linear regression. We have not even lost this supply yet. We are still in an uptrend. So until we lose 378, that is when the triple Qs are going to have a lot of room down back into the 350. As soon as we start closing below 378, and then we get that back test where we get rejected around that 378 or 380, that's when you know that we're going to start to fade into this 352. Until we break over 401, break that, retest 400, bounce, and start taking out all-time highs at 408.71, that's when you know that the market is going to get in trend, okay? When the market is not in trend, what the stock market did the previous day means nothing, okay? Because, like I said a few times already in this video, each and every single day, the market can go up, the market can go down. I know that sounds very generic, but what I'm saying is, and the point that I'm trying to make is there's no follow through in the market. So the stocks that you're playing, it doesn't matter if they closed green yesterday or red today. It doesn't matter. What you have to do is eliminate the bias, and you have to play the price action that the actual price action is giving you for that current day. I hope that makes sense. I'm going to try to make a little bit more videos and kind of talk about it But in the grand scheme of things, you would say even on a 2.5% down day that the overall market is still bullish. It still looks like the overall market can squeeze to the top side. This looks like we had a little bit of a run up here, okay, on the weekly time frame. We had a run up where we went 1, 2, 3, 4, 5, 6, 7, 8 weeks, which is 2 months higher. And now we come back and all we're doing is testing support. And we've tested it 1 time, 2 times, 3 times. How many weeks do we continue to test this bottom level before it breaks down? Or how many times do we test this level before we start coming up and breaking the level to the top side? As soon as we break the level to the top side, that's when you know the party started. And until we break the level to the downside, that's when you know the party started to the downside. For anyone swinging anything right now, I would be very, very cautious of starting any swing positions in these current market conditions until one of the two happens, until we either break down and flush to the 50 on the weekly, or we break out of 401 and start testing these all-time highs. I would not be swinging anything right now. I would just be looking to take day trades. I would be looking to size down very, very aggressively, and I would be looking to take quick moves that act in your favor and just take it off the table. The times of you entering a trade being positive, meaning green on the trade, and thinking, well, I'm just going to continue to hold it because the market is strong today. And then you roll that into tomorrow and the market decides that we're going to come back down and back test support, and you lose those profits and now lose money on your position that you started with. You know, you just can't do that. So just take the quick move that goes in your favor, put that cash in your pocket, and look to trade another setup that's giving you, a good looking chart, regardless of what the stock did the prior day. So just to make that simple once more, before I end this video, the Qs are still on an uptrend. Okay, guys. So all we're doing is just back testing support. And I know it sucks because you can't really find stocks to trade. You want to buy stocks to go long. Stocks keep dipping. And then when they do bounce, you're not getting the follow through that you expected. And then they roll over again. It's very, very difficult. So until we lose this level, we have to continue to just stay in cash flow, scalp, day trade mode. I mean, it is what it is until we lose this level, until we break out or we break down. I hope this video helps. Just take your foot off the gas a little bit. Everybody just relax a little bit. Structure on the weekly time frame hasn't been broken. Okay. And if we can just look at the daily chart here, bulls bounced this off the 50-day moving average almost to a T. So what does that tell you? There's still buyers in this range. Okay. Big money is still in this range. We have 1, 2, 3 wicks here. We have 2 wicks here. Buyers are still coming in off the 50-day moving average. This could very well put in an inside bar tomorrow, and the next week start testing these levels. And then Tuesday, Wednesday break out. It can completely look like that. Okay. Or we can put in an inside green day tomorrow, and then next week continue to lose this and flush down. So the point I'm trying to make is, can you buy stocks go long into next week? No. Can you short stocks going into next week? No. But can you find a setup and ride with the day's momentum, long or short, to make some cash flow on a day trade or a scalp? Absolutely. You just need to know your levels. Okay, I hope this video helps. I will see you guys all in the next video. Do me a favor, subscribe to my Discord. That link is down in the description box below. Also, subscribe to the channel. Give me a thumbs up. Drop me a comment, and I will see you guys all in the next one.